Imagine a world where you can't just buy Bitcoin anymore. A world where the largest exchanges open their digital vaults only to find them empty. Sounds like a crazy thought experiment, right? This reality might be closer than most of us realize. Because behind the scenes, far from the public eye, a quiet battle is raging for the last freely available Bitcoin. And today we're going to look at exactly why the supply of Bitcoin is dramatically shrinking and what it means for all of us. Let's dive straight into the facts. For several quarters, we've been observing a trend that is only accelerating. The amount of Bitcoin available for sale on major exchanges like Binance, Coinbase, or Kraken is steadily decreasing. In the last 12 months alone, nearly 1 million Bitcoin have been withdrawn from these exchanges. To put that in perspective, that's about 33% of all the Bitcoin that was even available for trading on those platforms. Imagine that. 1 out of every 3 Bitcoin that was accessible to retail investors, institutions, and even governments just 1 year ago has now vanished from the public market. But why is this happening? To understand this development, we need to look at the current market dynamics. In recent years, it's not just been private investors. Major institutional investors and well-known corporations have recognized the immense potential of Bitcoin. They no longer see it as just a speculative asset, but as digital gold, a store of value in an uncertain world. This realization has triggered an unprecedented wave of buying. These big players aren't buying Bitcoin to sell it tomorrow. They are buying it to hold for the long term in so-called cold storage, moving it off the exchanges and securing it in their own digital wallets. A look at the over-the-counter market makes the situation even clearer. In these markets, large blocks of Bitcoin are traded directly between buyers and sellers to avoid immediately driving up the public market price. But even here, the wells are running dry. The available inventory on these markets has fallen from 600,000 to 400,000, then to 300,000 Bitcoin. The latest known figures suggest that only about 156,000 Bitcoin are still available there. These markets, designed for the whales, are rapidly losing liquidity. Another critical factor is the behavior of over 150 companies that have publicly announced they are accumulating Bitcoin as part of their corporate strategy. That's just the official number. The actual number of firms buying quietly in the background is likely many times higher. Just this week, for example, Donald Trump's company, Trump Media, announced that it holds over 18,000 Bitcoin worth nearly $2 billion. Some of these companies have staggering goals. Metaplanet, for instance, aims to acquire another 200,000 Bitcoin, and MicroStrategy, famous for its aggressive Bitcoin strategy, also plans to buy another 400,000 Bitcoin. If you add that up, it creates a demand for roughly 1 million Bitcoin. But the OTC market currently has less than 160,000. This is an unprecedented situation. It inevitably means these companies will soon be forced to make their purchases directly on the public market. Some analysts like Samson Moe and Adam Back pointed out at the beginning of the year that the price of Bitcoin could rise to unimaginable heights if the buying pressure continues and the supply keeps dwindling. Some are even talking about a price target of $1 million per Bitcoin. This pressure could trigger a self-reinforcing cycle. Publicly traded companies that adopt Bitcoin as a store of value could gain a strategic market advantage over competitors who continue to hold only dollars. Better performance on the stock market would be the logical consequence. This, in turn, could lead shareholders of other large firms to demand that their companies also put Bitcoin on the balance sheet to avoid falling behind. More and more companies want to build their own Bitcoin reserves, thus increasing the pressure on the available supply. Even governments are starting to take an interest. In the US, some states are preparing legislation that would allow government agencies to purchase Bitcoin, but only if the asset has a market cap of over $1 trillion. Currently, only Bitcoin meets that criterion. Such decisions could have an enormous impact on Bitcoin's availability. Because if states also enter the bidding war, the competition will become even more intense. Another remarkable aspect is the sheer size of the sums being invested today. Just a few years ago, a $14 million Bitcoin purchase was a huge deal for a company. Today, we regularly read about purchases of $180 million, $500 million, or even $1 billion in one go. These funding rounds are becoming more frequent, and all types of investors want to profit from this trend. This fierce competition for Bitcoin also has a psychological effect on the market. Many retail investors, seeing the supply disappear, are deciding to buy now out of a fear of missing out, or FOMO. This creates a chain reaction. The more people buy, the scarcer Bitcoin becomes, and the more others feel pressured to jump in as well. But this wave of accumulation raises a central question: what happens when there is no more purchasable Bitcoin left on the exchanges? Here, we need to clear up a common misconception. Bitcoin will never truly run out. There will always be someone willing to sell at a certain price. The real question isn't if you can still buy, but at what price. When the amount of available Bitcoin on exchanges drops while demand stays the same or even increases, exactly what the fundamental laws of economics predict will happen: the price goes up. Everyone who wants to buy must bid higher to convince one of the few remaining sellers. This dynamic leads to a massive wealth transfer, where institutions and major investors are systematically securing an asset whose total supply is strictly limited to 21 million right from the start. This programmed scarcity is the fundamental difference between Bitcoin and traditional currencies or other financial assets. So, the concern shouldn't be that there will be no Bitcoin left for retail investors. The concern should be at what price it will be available. If this trend continues, Bitcoin could, in the future, be held mostly by large investors, investment funds, and governments simply because the price appears too high for the average retail investor. Of course, the price of a whole coin doesn't really matter, since you don't have to buy an entire Bitcoin. You can always secure just a small fraction of one. What makes Bitcoin special compared to gold or other assets is the sheer speed at which this scarcity is taking place. Information spreads in real time. The markets are open 24/7 and the competition is global. We also can't forget that Bitcoin accumulation isn't just happening by the big players. Millions of people around the world, like you and me, are regularly buying small amounts, often with the goal of long-term savings. If 100 people each buy 0.01 Bitcoin, another whole Bitcoin disappears from the market. As a whole, these retail investors are also contributing significantly to the supply squeeze. Furthermore, there's a clear generational shift underway. Younger people understand the value of digital goods much more intuitively than older generations. For them, spending real money on a Fortnite skin or other purely digital items is completely normal. For this generation, the step to a scarce digital store of value like Bitcoin is only logical. They see it as a natural hedge against inflation and the devaluation of traditional currencies. In countries with unstable currencies, Bitcoin has already become a genuine lifeline for many. In summary, we are at a historic turning point. Bitcoin, once dismissed as a fringe phenomenon, is now a central topic for financial institutions, corporations, governments, and individuals worldwide. The question is no longer if Bitcoin will succeed, but rather who will even be able to get their hands on one in the future. But what if the real paradigm shift isn't about buying, but about not selling? In the next video, we'll dive into a fascinating world and show you how it's possible to live off your Bitcoin wealth without ever having to sell a single Satoshi.